Investing in dividend aristocrats is being seen as a reliable and dependable way of getting high dividends from stocks. Dividend aristocrats are companies that have paid and increased their dividends for at least 25 consecutive years. Investing in these stocks provides long-term returns and can lead to financial stability. With major stock markets providing good dividend yields, now it seems like the perfect time to invest in dividend aristocrats. By investing in these top dividend stocks, you can get higher returns with stability over the long term. Many investors have already taken advantage of this opportunity. In today's video, I'm going to share with you a list of 8 of the best and high-yield dividend aristocrats to invest in 2023 and make passive income with these stocks. Before getting into our topic, please like this video and subscribe to the channel if you like the content I'm offering you, and stay updated every time I publish a new video. A dividend aristocrat is a company in the S&P 500 index that not only consistently pays a dividend to shareholders but annually increases the size of its payout. A company will be considered a dividend aristocrat if it raises its dividends consistently for at least the past 25 years. Some aficionados of dividend aristocrats rank them according to additional factors such as company size and liquidity, for instance having a market capitalization in excess of $3 billion. Now that we all know what a dividend aristocrat is, here is my 8 best dividend aristocrats. Number 8, Dover Corporation. Dover is an industrial machinery company that manufactures specialist industrial products and manufacturing equipment. Dover has also raised its dividend for 67 consecutive years, which is a longer streak of dividend increases than any other dividend aristocrat. Analyst Jonathan Sokritis says Dover's leeway to shift its portfolio to higher, less capital-intensive products has improved profitability. According to him, the cost-cutting measures are helping Dover's long-term earnings growth and helping the stock outperform its peers. It projects 8% revenue growth in 2023. Dover to 1.4% dividend. CFRA has a buy rating and price target of $155 for DOV stock. Number 7, Procter & Gamble Company. Procter & Gamble manufactures household products and owns popular brands such as Pampers, Tide and Bounty. According to analyst Ana Garcia, Procter & Gamble was generating impressive cash flow and solid sales growth even before the COVID-19 pandemic, but its best-in-class supply chain and high price have maintained its competitive advantages over the past 2 years. According to Mr. Garcia, the company is well positioned to gain market share in an inflationary environment. Procter & Gamble has a 2.4% dividend and increased payout ratio for 66 consecutive years. CFRA has a buy rating and a price target of $163 for the PG stock. Number 6, Coca-Cola Company. Coca-Cola is one of the most valuable brands in the world and the largest manufacturer of soft drinks and syrups. According to analyst Garrett Nelson, Coca-Cola lagged competitor PepsiCo Incorporated in 2020 and 2021, but Coca-Cola outperformed PepsiCo and the S&P 500 in 2022 and a positive outlook for 2023 according to Nelson. A resolution of the $12 billion tax dispute between Coca-Cola and the Internal Revenue Service could be a bullish catalyst. Coca-Cola has a 2.7% dividend and has increased its payout for 60 consecutive years. CFRA has a buy rating and price target of $68 for the KO stock. Number 5, Federal Real Estate Investment Trust. Federal Realty Investment Trust is a retail real estate investment trust, or REIT, that owns and operates convenience and neighborhood shopping centers. Federal Realty has a 4% dividend, the highest of any stock on this list. Analyst Michael Elliott is optimistic about the REIT's management team and asset portfolio and says the post-pandemic economic recovery in the United States has benefited tenants and increased location demand. Federal Realty reported an impressive 92.1% occupancy rate in the third quarter. Federal Realty has increased its payout rate for 55 consecutive years. CFRA has a buy rating and price target of $118 for FRT stock. Number 4, Granger Incorporated. Granger provides industrial and commercial supplies, such as electric motors, hand tools, and light bulbs. Granger has demonstrated its value as a defensive investment in 2022. Based on total return, which includes the impact of dividends, the stock is up 17.7% year-to-date. According to Mr. Secrita, Granger has key competitive advantages, including a global supplier network, an efficient inventory management system, and a positive reputation with its customers. Dividend Aristocrat has a 1.1% dividend and increased payout ratio for 51 consecutive years. CFRA has a buy rating and a price target of $608 for GWW stock. Number 3, Abbott Laboratories. Abbott Laboratories is a global specialty healthcare company that manufactures branded generic pharmaceuticals, medical devices, and other nutritional and diagnostic products. According to analyst Colin Scarella, Abbott's innovative and diversified business model, along with its strong balance sheet, will allow the stock to outperform its peers over the long term. In 2023, Scarella says investors should expect lower demand for COVID-19 tests to cause Abbott's sales to fall 4%, but he expects profits and revenue to rebound for reaches new heights in 2024. Abbott pays a 1.7% dividend and has increased its payout ratio for 50 consecutive years. CFRA a buy rating and a price target of $110 for ABT stock. Number 2, PepsiCo Inc. PepsiCo is a global beverage and snack company. According to Nelson, PepsiCo is a blue-chip defensive stock with a strong balance sheet and high earnings stability. He also adds that the company has valuable brands, such as Frito-Lay, Gatorade, and Mountain Dew. Loyalty to these brands allows PepsiCo to pass on rising costs to consumers by raising prices in an inflationary environment. According to Nelson, Frito-Lay and international sales will be key growth drivers for PepsiCo. PepsiCo has paid a 2.5% dividend and increased payout ratio for 49 consecutive years. CFRA has a strong buy rating and a price target of $190 for the Pep stock. Number 1, Walmart Incorporated. With a chain of nearly 11,000 stores, Walmart is the world's largest discount retailer. According to analyst Arun Sundaram, excess inventory and cost inflation have been headwinds for Walmart in 2022. However, Sundaram says Walmart's omnichannel business model and innovative growth initiatives, such as Walmart Connect and Walmart Plus, have set the title for the best days ahead. It projects that higher prices and market share gains will drive sales growth of 6.5% in fiscal 2023. Walmart is paying a 1.5% dividend and has increased its payout ratio for 49 consecutive years. CFRA has a buy rating and price target of $160 for Walmart stock. That was my 8 best Dividend Aristocrats list. There are so many others Aristocrats company stocks that I can't list them all, but if you have anyone in mind, feel free to share it with us in the comments section. And by the way, hit me that like button and subscribe to the channel, it's totally free for you, and it really helps me a lot. Investing in Dividend Aristocrat stocks is a dependable and safe method to accumulate wealth over time. These blue-chip stocks have been able to consistently pay dividends for many years, providing investors with a steady stream of income. Many blue-chip stocks have a solid dividend history, providing investors with a steady stream of income. Furthermore, the safety and security benefits of investing in dividend yield investments can provide investors with peace of mind when it comes to their financial future. Investing in dividends can be beneficial because dividend payouts provide a stream of income to the investor, which can offset the risks associated with volatile market conditions, says Peebles. Investors in dividend-paying stocks may also experience more consistent returns over time. For long-term security and peace of mind, investing in dividend yield stocks is highly recommended. It can be a great choice for investors who want to pay less attention to their retirement funds, as they have been shown to be less risky and provide opportunity for greater long-term profits. To conclude this video, I would say that investing in dividend stocks is an excellent way to generate passive income. The Dividend Aristocrats are an elite group of high-dividend stocks that have consistently paid increasing dividends for 25 consecutive years or more. These stocks offer investors a reliable source of income and the potential for capital appreciation over time. Investing in Dividend Aristocrats can provide a steady stream of income and help to diversify your portfolio. Here we are at the end of this video. Thank you for watching it. I hope you found it helpful. Before you leave this video, make sure to like it and subscribe to the channel. See you in the next video.